Hello everyone and welcome to another edition of the Forex Market Update. My name is Bion and in front of us we have a daily chart of the euro versus the US dollar, and as you can see we have been in a fairly tight range with the market bottoming just above the 110.50 area and topping out near this 114 area. So these two levels have contained the market over the last month or so. Looking at the 4-hour chart, we see that the market was in a minor consolidation with a channel with the boundaries being it's about 114.50 and 112.90 to 112.80. So this level was containing the market for the better part of 2 weeks. And what happened the last week was that the market convincingly closed below the channel line and has been heading down ever since. Now, I have pointed out the fact that I believe that this market, after this very long downtrend, at some point the market has to reverse course, and at some point what we will see with the market is that it should correct. Now the question is, at what point would it correct? I believe that we may get another test of this low, this previous low that was made in mid-January. So the low is 110.97. Let me just move this here. So we have 110.97 is the previous low, and we see that the market is closing in on this. And to give us some clues as to where the market could likely reverse, we can also take a look at the monthly pivot points. Today is the 2nd of March and new pivot points were published, or you were able to calculate new pivot points for the month of March. Okay, so taking a look at the pivot points for the month of March, these are the pivot points. This is the R2, this is the R1, we have the central pivot point, we have S1, and we have S2. So our S1 pivot point is telling us that the likely low, remember pivot points are projected low and highs for the month. So our S1 pivot point is telling us that the projected low could be at 110.07 and the S2 is at 109.44. So 110.07 and 109.44. Taking a look at the previous low, we have it at 110.97. I believe before I said 109, but the low is at 110.97. So we have a 110.97 as the previous low, and we also have 110.70 as our S1 pivot point. So as traders, what we should be looking at is to see if the market gives a signal at these lows, around this previous low, because what normally happens is that the market can sometimes go in and you may see a double bottom. I'm not saying for sure that this market will bottom at 110.97, but it is a definite possibility, seen as though the pivot points are lining up near that area. And that's how we analyze the markets. We project areas of that could turn into support and areas that could turn into resistance. Now, given an example of what happened, we had that what started the decline back in June of last year, just to give an example of this phenomena. We had a high in mid-March, and this high was just below the 140 level, and the high was at 139.68. And coming into May, the market tested that 139.68 level again. But what we could see is, or we could look back to see in May of last year what the pivot points were saying. And in May of last year, the pivot point, the S2 pivot point, was just about the 139.56 level, as denoted by this blue line here. The blue line here. So it almost lined up perfectly with the previous high that was made in mid-March. And what we saw is that we got a sell signal here, and the market collapsed. And the market collapsed ever since. So that's why it's important to look at these pivot points, because they can definitely act as projected high and lows of a particular time frame. So just to recap, we're going to see if this very same phenomena happens in the euro currency. Now, I'm not saying that you should jump in and buy the euro currency if that happens. I'm just telling you what you could look for, and have your ears in tune for the market to rebound. And as always, let the market prove it by actually issuing a buy signal, and not, or issuing or telling us that the market has bottomed with a positive candle pattern. So for example, as the market approaches this low here, if the market is going to bounce, you would want to see the market trade down to the low, and you get a positive candle pattern similar to this. This is a hammer spinning bottom type candlestick, and we got a high close over that. So what we're looking for with this example is a similar type of setup. So that is what is happening in the euro currency. Now let's take a look at the daily chart of the Canadian dollar. And sometimes when you're trading this market, you just need to look for a particular setup. Now, taking a top-down approach to what's happening in the Canadian dollar, we see that the market is in a broader uptrend, as you can see here. Higher highs, higher lows is what constitutes an uptrend. Just looking at this chart, we see that we have pretty strong support here at the 124 level, and this is how you look at the markets top down if you are doing shorter term trades. So you have, let's go into the hourly charts. So what you have here is the 124 level acting as pretty strong support, and if you're a day trader, you see that the market was bouncing off of this 124 level, came down, bounced, came down, tested the level, bounced again, tested it, bounced again. It didn't come down quite as far here, but came down over here, down to the level, and bounced again. So when we're day trading, what we look for is, and I think the preferred way to actually do day trades is that you look for strong areas of support and resistance, and you base your trades around that area. And what you would be doing is going with the prevailing trend and with the smart money, because as you can see, the market is in a broad uptrend. So what you're doing is trading with the trend on the Canadian dollar when you are trading this support level. Okay, so that is a look at a trading opportunity in the Canadian dollar. Now let's just take a look at the Japanese yen. And in previous updates, we have spoken about the fact that the market was breaking out of this particular consolidation pattern. What happened was the market broke out, came back down, tested this downtrend line, and is now on the way back up. And this is a classic example of a triangle break. When the market breaks the triangle, it normally comes back, tests around the area of support, which is the downtrend line. It comes back, tests that area, and then normally, if this test is successful, continues to move up. The first obstacle with the yen will be up at this previous high here. Let me just draw it. Or previous high here. Put the line down a little bit. Okay, this previous high is at 119.89. So we could see some resistance. Looking on the 4-hour charts, we could see some resistance up at this. Actually, it's 120.40 to 120.50 area. We could see some resistance at this area in the Japanese yen. If the market does break above this area, we could see a retest of the 122. The 122. Well, this high is at 121.84 high. So we could see a retest of the 121.84 high. Taking a look at the pivot points quickly, we see that the monthly S2 is at 122.73. So it doesn't really coincide with the high here in the Japanese yen of near that 121 level. So we will see if we get a sell signal up near this pivot point. Okay, that's how we take a top-down look at the markets. And just remember, when you are trading the markets, it's very important that you look at the technical picture, and it's very important that you are able to analyze what is happening exactly with the markets. And what you could do to practice is just open up charts and see if you could draw trend lines. See if you can draw your areas of support and resistance, because that will assist you and build your skill in being able to analyze this market technically and to see what exactly prices are doing. Okay, so this is Beyond. Thank you very much for listening, and I hope you have a good trading week. Thank you.